Welcome, everyone. Thank you so much for joining us today. We have an amazing list of panelists, too much talent packed in one stage. So we're going to try to make it interesting and straight to the point. We have a very interesting topic ahead of us. I mean, it's liquidity. We're at the iFX Expo, so liquidity is always a big topic, and these guys are a wealth of knowledge to share with us. So without further ado, I'm going to ask each of you to introduce yourselves very briefly and what you do. So, Andreas, maybe you want to start.
Sure. My name is Andreas Kapsos. I'm the CEO of MatchPrime. And indeed, this is a very nice panel with some familiar faces. Should be a good one.
My name is Michał Copiuk. I'm managing the institutional arm of the XTB, X Open Hub, and I'm passing the voice to John.
Good morning, everyone. Great to be back in Cyprus. I'm John Murillo, Chief Dealing Officer at B2Broker. We are a technology provider and a multi-asset LP.
Hi everyone, welcome. My name is Valentis. I'm the COO of GB Prime, and feel free to have any questions.
Hi everyone, this is Mohammed Spear. I'm the CIO of Equity Group. We're also a multi-asset broker in different jurisdictions. I'm very happy to be with these amazing panelists and friends, and hope they will be beneficial for you guys.
Thank you all for being so brief. Very good start. Okay, so without going around the bush, I have to ask about AI and blockchain. Sorry, guys. I know it's being talked about a lot, but this is what the audience wants to hear as well. So what is happening these days that you, as liquidity providers, are taking into your businesses? What kind of innovations are you working on related to AI and blockchain these days? Mohammed, you're ready.
Yeah, I mean, I'm trying to use ChatGPT to answer. But no, I think AI, when it comes to technology, has a lot of integration that can be in the space. The fact that you'll be able to consume vast and analyze vast amount of data, it will definitely have a major impact on price discovery and at the end of the day, improve execution quality and speed. The problem is still we don't really know the extent of how much we can do with it. It's an evolving technology. So you can't really kind of put where is it going to lead us to the end, but the developments that we see now in creation of pricing engines, in smart order routing, even sometimes in regulation and reporting, the benefits are immense. The other thing that is also something that we need to consider is that also regulation around AI usage is also evolving. So we're still also not sure how much regulation might hinder the growth or the integration of these AIs. I think it's still early stages, but when it comes to liquidity and price discovery and price matching, I think the benefits are immense, and not to mention risk management as well. A lot of exciting stuff that can come out of it, but as I said, it's an evolving technology. We're still at the prime stage of it, and we'll be able to tell more in the next 2 or 3 years.
Mm-hmm. Thank you. Michal, you wanted to pick up on that?
So basically, it's quite a vast topic. I think not even an hour or half an hour will cover that. Basically, we can sit here for 2 days, and I would say that maybe we don't know yet where AI will bring us, but I think our imagination is the limit here, yes? Because many things can be done. First of all, implementing the AI for the LPs, like starting from the smallest things, like improving the customer service, customer support, answering the automatic questions on the spot or directing to the direct basic documentation, APIs that we have in place. So basically improving the customer experience, that's the first thing. The other area, huge area, is of course trading itself, as my colleague mentioned. And here, still we've got a lot of different cases, both on buy side and sell side, yes? So the traders, family offices can use, or hedge funds, of course, can use AIs to scrape the data. Of course, and the engines work in many different ways, and also it depended on us what data will fit the model, yes? What data can be scrapable, like even Twitter, of course, and any other source of the information. Like in US, even hedge funds are buying the data recently from the CCTV providers, yes, and they count how many people, for example, is entering McDonald's in a particular quarter or month. So basically on that information, they are trying to basically assess what will be the profitability of certain companies. So basically, of course, we got the other cases. The law in US is a bit different than in Europe here. Basically, they can buy data from credit card providers. So basically here they can also assess the outcome of the profitability of certain companies. So here I would say that our imagination is the limitation, and the data what will feed the engine models. Of course, the other thing is trading, yes, analyzing the depth of the books, of course, trying to assess, for example, the results of CPI, yes, all the macroeconomical data, yes. Here, of course, it can be still divided into smaller portions of data, combined, analyzed, and of course, future trends can be foreseen. So here, I would say that imagination is our limitation here. The technology, of course, will follow. The technology in terms of processing that data is evolving very, very fast. Each time we've got improvements in terms of the analytical, statistical data and the speed of analyzing that. So here, I would say we are facing very, very fast progress.
Thank you, Michal. Andreas?
I would answer more specific on the question on the technical innovation, because that's something that the ones that I would say that they stand out for me is definitely the decentralization finance, let's say, which brought the rise of the platforms, of the DEX platforms, exchanges, and in addition to that, the decentralization liquidity, which cuts the intermediary, which we all know that creates delays, and without that, obviously, the speed is much better. And also, I would say the execution is much better, it's cheaper, the cost goes down. Also, another one, a very big innovation would be the custodians. The custody that is being created now is a big, big business now. I mean, a lot of liquidity providers, we have our assets in several custodians, which we slowly started feeling more confident about it. We're not worried about having them, where back in the days we will immediately try to, which is also super, super new, and it's good for liquidity providers to manage their assets. Although I'm wearing my Match Prime hat today, don't get me wrong, guys, I'm talking mostly offshore. And back to what the gents mentioned about how to use the data. Undoubtedly, this is just the beginning. It's just a small fraction of what we can do. But using the data correctly, you can have sentimental analysis and even predictive analysis. So you can know how the liquidity will be needed once you analyze the data, because you will know how the market will react. So for us, it will be very important to know how we will provide that service to the clients. Yep, this is it for me.
In general, you may have exceptions, and then it breaks the system.
Yeah, that's true.
It's very interesting that you mentioned the pricing, actually. You said that all these innovations may bring the cost down and impact the pricing, etc. But actually, I remember speaking to some of you, I think it was, I don't even remember, one of the last few expos, we were discussing how the pricing was kept being pushed to be low, but it keeps going up, and while at the same time everybody is asking for the best quality of execution, fastest execution, etc. So maybe you can develop a little bit, all of you, on these points, because I think pricing has been one of the main pain points when we're talking about liquidity, etc. So maybe it's connected now with the innovation in AI. Is that going to help to service the industry better with the pricing?
So
John?
I'll take on that. My belief is that AI, blockchain, etc., all these different solutions we have at our disposal today, what they're doing is they're giving us a holistic approach, and we can be much more granular than we were ever before, so that your operational element, your operational cost can be sustainable, it can be realistically forecast, and therefore, when you manage the operational side of your business, and I'm speaking from an LP perspective, then you can go and find growth areas with your client base And to do that, you need to understand very clearly what their needs are, and that's what data provides. In a nutshell, is the ability to understand your client base better than ever before. Now, with that data, then you come to the LPs, in our case, and you disclose to them what is it that you need to achieve with your clients. And then that communication dialogue process begins, and I think that brings the win-win situation for all of us. So AI, in essence, is probably the most powerful tool. And I'm not saying this, I understand that regulation, might come in sooner than soon, who knows? But for the time being, it's giving you the opportunity to truly optimize your operation from many different angles. And I think that's the true value, at least for our industry.
Valentis, maybe?
I would agree to what you say. AI, what better industry to use AI than our industry that is full of technology? And it's definitely something we need. We are receiving so much data that, like you mentioned, it will allow us to understand what the client needs or at what times we can improve. But the challenge with AI that it needs a couple of years to be developed, like Mohammed mentioned, is the decision making. Would we allow the AI to make decisions for us? Because that's where the challenge is, how smart it will get, and at which point the regulators will also allow us to allow the AI to make the decisions for us, or what challenges we will find when we are testing these systems.
I couldn't agree more with Valandis, actually. I wanted to add something to it. AI and data warehouse, it's the first step. Then the continuation of that, this is something that we worked at the end of the last year. It's putting this into, let's say, a snapshot. So you can be able to do what John was saying, like to know where you stand so that you can go back, obviously, from collecting all that data and get the results, have a snapshot of your business, what you need to do, what you need to change, and then apply it. Usually, for example, in our case, we're using QuickSight, which is basically taking the data from there. We're using QuickSight. QuickSight gives us the information, and then we'll take action. Now, to answer Valandis' question, which, well, it's not an answer, it's again a prediction, which is a very good question. Will we allow it to take the final call? I think we're in the last generation, which we are actually hands-on guys, and we want to take the call.
Control
we
freaks.
we don't feel confident if a machine takes the call, but I'm sure along the years we will all have to adjust, and I think the answer will be yes.
But sorry, if I want to add, because I remember that conversation we had last time. It was about the race to the bottom and how we go into these cycles when then everybody wants lower spreads. And maybe the answer into this, and I'm not talking about taking decisions about companies and strategies and so on, but I'm talking about the liquidity provision itself and the price generation itself. With the increase of the retail trades, and the retail trades are a lot there's much more of it in a shorter time, so it gives us a lot of data to analyze and process, which results, like you said, there's going to be a predictive kind of outcome of it, not to mention that you have an edge. So you'll be able, perhaps with the integration of AIs and algorithmic tradings, to be able to achieve that low spread while still make money, because the problem with that race to the bottom is that the profit margins are going down, right? But with the prediction abilities of the AIs and the amount of vast data that we are actually processing and be able to kind of monetize it and take that predictive patterns out of it, you'll be able to achieve the best execution quality, which is, again, a regulatory need that is one of the essence of how regulation works today, is best execution and low spread, and at the same time still be able to monetize by using the AIs to actually generate alpha.
Just to finish, I would like to emphasize two points that gentleman mentioned. So first of all, AI is a tool, yes? There is a term even in US, like AI nomads, yes? That's like right now we can have like one-man show that one guy has a tool to analyze all the data. You don't need all the teams of data warehouses, all the basically programmers to do the proper research, yes? And still, I think, we'll just get the the prediction or basically general idea, and we are here to make the decisions. If not, we'll lose our jobs, yes? So first of all, we are receiving great tool. Second of all, we have to prepare the accurate data for that. And of course, we can be beneficiaries out of that. The same like in the industry, like healthcare industry, yes? Right now, basically the AI is analyzing all the data that they received from, let's say, blood or any other examinations, and basically they give the hints to the doctors, yes, to improving and making their job faster, yes. There are a lot of startup projects right now in the healthcare business in US that just focus on the data analysis, both on the pictures, and I think, and both on the data. And I think the same on our side. We are receiving great tool, and it depends on us how we will implement that. So if we use it well, of course, it may bring benefit both for LPs and the consumers of our liquidity. But coming back to your question, how to, of course, maintain good pricing and the quality execution, I think scale here is the answer. Like on the top of that, yes. The bigger scale you are achieving, you can spread the cost to more participants of the market. Yeah.
There is a couple of points that have been raised up in several occasions, so I'm going to take them one by one. One is we've mentioned regulation a few times. So I actually want to connect with that because we're talking about regulation in terms of how is that going to affect AI and how we can use it and everything. But there is a new trend that you have all been witnessing as well in the industry, which is prop trading. And there is no regulation at the moment for it. How is prop trading and new trading platforms of the sorts currently impacting the operations and the strategies of liquidity providers? Is it having any impact at all? Are you adjusting to it? I mean, I know that Match Prime and Match Trade, they have actually jumped on board of the ship, which I'm sure Andreas will tell you about. But how are all of you dealing with the wave of the prop trading? Do you think it's here to stay? Is it going to be included in the regulation? Let's open this up.
I'll start if you don't mind, yeah. I'll start from the liquidity side, okay? I think the new platforms that come into play, they're not really affecting, I would say, the liquidity providers that much because they have, usually they're native API. So I think usually who needs to be a bit more worried about this is the bridge providers. For liquidity providers, it's simple. I mean, we will get that native API, we'll connect, and that's it. So I wouldn't consider that as a big change for us as liquidity providers. Now, going back to your prop trading question, yes, indeed, the last 8 months have been a total insane. Yeah, we have so many requests about it. It's obviously the new trend. The question now is survival, optimization, how they will take their business to the next level. I mean, it's nice to see something new, especially my colleague John will also concur on that, and he will give you his insight. We get all these leads coming in, converting, getting the props, but at the end of the day, I consider ourselves a good businessmen, and we have good companies behind us, and we're looking on the long term. So for us, it's very important actually to optimize and have this for the long term and not the short term. We will see very soon, I'm sure, some of the prop tradings. I don't want to sound pessimistic, but that's the truth. We will have some ones who are not going to succeed. So I think that will be the second wave of the prop trading, let's say,
the consolidation part.
Yeah, we will see how that works. Now, prop trading and liquidity now. Prop trading and liquidity, yes, they started having a correlation now, slowly, because obviously the prop trading that they will choose to fund the accounts with real funds, at some point they cannot sustain that risk on their end. So they are looking for companies like ourselves so they can start hedging. Mm-hmm. This is something that we are all ready to accommodate in this part, but it's a bit sensitive once again because that flow and that trading has been through several levels. So that means it needs a specific way to risk manage that from our side. So it's quite challenging for us. It's new and challenging. But having the right risk people on board, I'm sure this can be utilized by everyone.
On the right AI.
Taking,
That's Mohammed.
taking on what Andrea said,
Valentin.
on new platforms, of course, new platforms and new innovation is welcomed in the industry. It doesn't affect liquidity a lot, but anything that can enhance the client experience, then it's welcome. And by all means, increase volumes. It's profitable for all of us, and it keeps the business going. Now, touching on the prop trading, the question I personally have, and us as GB, is it okay, it's something new, it's something nice, but let's not do the mistakes that happened some years ago with binary options.
I knew you were going to say that.
Exactly. So if it's something good, yes, let's do it. Again, it's more business for us, like Andreas has mentioned, that it will eventually, the prop trading firms will need to hedge and they will need to come into the liquidity side. But let's not make a big deal out of it without regulating it correctly and watching after it.
Michal?
So from me, like 2 or 3 impacts here are coming from prop firms. Yes, first of all, I'm trying to look always at the certain topic from 2 perspectives, short-term and long-term. Yes, so the long-term is that prop firms are developing the market as a whole. Yes, because they are bringing newcomers to the market, which cannot allow to basically fund their own accounts. That's the first thing. So it's opening up the doors for the, let's say, youngsters and basically younger people. As you can see, even if you look at the website of the prop firms, many of them looks like basically gaming sites. So for sure, the new generation is being dragged into the financial market. So this is it. That will be good for all the industry, no matter what, whether you are a retail broker or institutional trader or basically institutional liquidity provider, because at the end of the day, some flow will come to you. Second of all, short and long term as well, basically we see that the companies are coming up with ridiculous trading conditions for their clients that can be easily manipulated or basically abused. Yes, so we see that many of the companies are right now struggling with surviving because they've got too many payouts. They try to hedge, they do it very chaotically. So of course there are still the first company that will come to the market with decent hedging strategy for the guys, for the prop firms. And we should understand that many of those firms are startups and are not having sufficient funds to fund their hedge accounts. So basically, the first company will solve that problem for those prop firms will be benefiting out of that. And of course, the third thing is that technology also needs to be adopted as well as the liquidity solution, as I mentioned.
Do you wanna? I have a very small. First of all, I don't agree on calling these companies prop firms. I think that's a misuse of the term. I'm not saying anything bad about them, but I think prop firms should be different than what they look like today. In terms, and I try to kind of, as much as possible, to keep this on the liquidity provisions. I don't think it's going to affect liquidity whatsoever. I think it's just a new influx of more of retail trading. The other point that I have is I think the majority of these prop trading firms are actually owned by FX brokers. So they've already got, I wouldn't say them all of it, but I think the majority are affiliated with already existing FX brokers, which I think the flow has already been started to kind of maybe come through. But I think it's just mainly a smart way of going around the regulation and the onboarding. It's faster onboarding. Like I said, there's a lot of gaming in it, and you can attract a lot more people with that, let them go through the hassle of the onboarding and so on, which is a good thing, but regulation is gonna have to come at some point and stop this, because now you can do even US clients, you can do Japanese clients through this. So it's a loophole. I see it as a loophole.
It's definitely a new way to bring business in. It's what Michael said as well. I mean, it's a new wave of attracting someone new to get him into the business, which is spot on, yeah.
like a two-step acquisition, yeah?
But I cannot agree that those firms are owned by the brokerage houses. I would totally say the different thing, that within 10 biggest prop firms, I cannot see any being owned by the, can you name like 2 or 3, the biggest one?
I can't say because they're not directly owned, but
Mike?
definitely they all have.
No, I think
I know
think,
one. I know one. I can name.
but still not,
But
not the majority.
Yes,
the biggest
not
one,
the
the biggest
majority.
5.
But yeah, some of
totally
them, all the
independent,
same
yeah.
UBOs might own. Yeah, that might
Correct,
be.
but those started a very, very long time ago. I think what Mohammed is referring to is that the new wave, all the new ones that started in the past
new
8
ones.
months.
Yeah, I
Of
agree.
course.
We are currently,
Sorry, so I missed
we're
that, yeah.
currently seeing.
Every FX broker now is doing
Yeah,
their
of
own
course,
prop.
Yeah,
of course.
'cause
The other way of
maybe-
feeding the leads, yeah.
At this stage, I'm actually seeing it more than a new way to bring the business in rather than something new. But because we haven't touched the regulation side of things, I agree with Mohammed. At some point, it's inevitable. I mean, we've seen it in the past with other examples, like binaries, even leverage changes. It will touch them at some point. So the smart move from the prop trading firms is to be proactive and not reactive. Like, see what happened before, take the necessary actions so they won't be in a situation to have to stop their business.
Exactly. The industry has matured enough since the days of, like Valentis was mentioning, the days of binary options. I mean, it reminds me so much of those times, actually. And there is so many similarities on it, but I think the industry now has matured to learn from the history and now, get on board with the regulators and maybe have, like you're saying, a proactive approach of engaging more into a conversation, understanding what the regulation is going to look like so you prepare for it from now when you try to align your business more towards what at the end is going to be requested from you instead of having to close shop when the regulation comes out.
How you also said the question, I'm not sure if you put it on purpose together, the new platforms and prop trading, because
Take it as you wish.
because meta codes jumped on it and it's stopping it. So that tells us something as well, especially with the US clients
I
onboarding
think
and
that's
so
the
on. And
great
what
opportunity
happened.
for the others. MetaQuotes, for sure, they are the biggest and most probably, but maybe those guys are making the biggest mistakes right now.
Yeah, possible, but they had the trouble when they got removed from the App Store and stuff like that.
They won't jeopardize the main business just to try something new. That's for
Yes,
sure.
exactly.
I actually want to hear from John because he's the only one that has been quiet, but I know he has things
Which
to
is
say.
very
so-
unusual, huh?
Yeah.
That's not usually me. All right, so on this topic, we basically just got into the space. We've had so many requests over the last 1.5 years. Many of our partners wanted us to develop or offer a solution. To be honest, we stayed away for a very long period of time until, I had
Until
no
you
choice.
can't deny it.
Because what was happening is if I don't offer you a solution within my ecosystem, you're just going to go somewhere else. And potentially I can end up losing that business. So I think for all of us in business, we always need to assess each business case. Now, prop trading, going back to repeat some of what my peers have mentioned, the term is kind of misleading, but it's a new creative way of attracting new business. I get that, right? We all do different things. I mean, our company historically has tried so many different approaches and strategies. Some things have worked very well, some have not. Now, prop trading, I think the regulators are catching up on it now. Okay, recently, and I have a report from the legal team, we have seen that some jurisdictions are about to crack down on it. Right?
Which ones?
Let's
you
not
have to
comment
share
on
it.
it. For liabilities reason. No. The point I'm making is, just like in any industry, and touching back on, I think, on your experience here in Cyprus with binary options, if there are good business practices in place, it should never be an issue. Unfortunately, we are in an industry where people take different steps outside of the scope and under which we should all operate. It's a fantastic industry. It's been around forever. It will continue to be. Every year we think, how much more growth are we going to see? And suddenly, you see 5, 10, 20%, and it's outstanding. Prop firms perhaps are here for a short period of time or long term. Who knows? Truthfully, it will come down to regulation. It will come down to trends. We are in an industry where there's constantly something new for everyone. And for us specifically, we have an R&D team that needs to provide me with, you know, I like to say that we've been quite innovative sometimes, right? We've done crazy things and have worked very well from a tech side. Prop trading, will it really last for a long period of time? This is what I ask myself and I ask the team when we sat down and we started introducing now prop trading. We've done all the integrations and it's a new service for us coming up. Purely on demand basis. Is it sustainable? This is what I ask you. And the reputation that has at present is not the best. And it doesn't mean that I'm saying that it's a bad industry, but if you guys remember Cyprus back in 2013, 14, binary options were booming. Everyone jumped on the wagon, but then it got a little, you know, it went the wrong direction, let's just say that.
To say the least.
Are we going to see the same, though? Are we going to see, because, you know, history repeats itself, unfortunately.
I hope we have learned from it, because it's
I
been
hope
10 years.
so too. But that's the industry we're in, you know. I think if everyone does the right thing, if you if you set up the proper challenge, there's nothing wrong. It's just a new way of doing business. When someone walks into a casino downstairs here, for example, you know what you're getting into. All right, so if the prop trading firms continue to do the ethical, I am a firm believer that this industry can grow tremendously. And luckily for some of us who are on the LP side as well, we will see some of that flow because people will naturally learn how to exploit those opportunities, and then broker-dealers or whichever firm is running this business needs to offset risk, and that's where we come in.
If he's right, if you do it ethically, there is nothing to worry about, obviously. And what we have been observing from some of our clients, it's actually an observation, I'll share it with you guys. Some of our, let's say, broker clients, they've done synergies now with prop trading firms. In order to take it, because they don't have the expertise to do it, they start obviously with the demo funding and everything, and once they filter the clients that they want to go real and they want to convert them to real, they made a synergy with a broker. I won't name names now because, I mean, it's a synergy between them. And they would start onboarding clients who started from the prop firm to their broker and then effectively hedge to us. So that's the right way to do it because that means you're doing what your job is to do and you're not trying to do something else which is not yours. So if you don't have the expertise to do it, you might as well go that path, be ethical about it, create a name of yourselves, and then that's where you have long activity, which we would like everyone to have at the end of the day because we all get benefited from it.
Okay, speaking of innovation and new business opportunities, and we have talked a lot, like data has come up literally in every sentence that you guys have said. What kind of data and market intelligence is needed nowadays as a liquidity provider to be able to identify for you guys new business opportunities, where the industry is going? Where is it, like you were mentioning, John, you know, like it took you a while to make the decision and you're doing it now based on like demand basis and things like this. Like what kind of data do you guys need in order to make decisions that is valuable, that you would like to have at your fingertips?
Yeah, if I'm
Mohammed.
There's so many. I mean, data is now, like you said, it's like the new oil, right? It's what makes you or breaks you. It's what gives you the how to make the right decisions. But data is also important on so many levels. When it comes to liquidity, you've got the first thing that you look at is market data. Analyzing order books, or analyzing flows and liquidity, and being able to construct your pricing. Also, smart order routing. That's a very important concept that is data-driven as well. But also, you need to be looking as well at data like competitive analysis data. You have algorithmic trading data. Sometimes even looking at the data from regulators and be able to analyze the trends of the regulation to be able to kind of predict where you should be going. From a liquidity perspective, data is massive and can really affect how you basically price and offer the best execution quality and pricing to your clients. But also you have to look at it from market sentiment perspective, which also gives you directions of the market, regulatory sentiment, which also, even from like news and geopolitical data, that also can maybe affect your decisions of expansions and pricing and so on. So it's a lot of data sets that we need to look at. But the start should be at market data, volatility, order books, type of flows, and kind of integrating that. And this is the major piece that we should be looking at. And then we shouldn't be forgetting about the other piece. The other piece is just softer in terms of decision-making metrics.
Valentis.
I will touch this point, what Mohammed touched on with the previous point, that market data and we as LPs, we speak a lot between ourselves. And what you touched before, that clients were pushing more for the spreads to become lower and the margins decreased. And we had players entering the market offering the stars and the moon sometimes, but bringing the industry and the industry maturing so much, it was more challenging for us. But we came to a point where we were collecting all data on our private discussions, and we were saying, okay, where are we going? What are we doing? So this is where the collaboration between us and also as a second step with our clients, then it gives us the direction where we must go and where we must improve or what to provide to the client.
Interesting. John?
So for us, I mean, I guess for all of us here, it comes down to understand client flow, that business that's coming in, especially at the early stages where you don't know what to expect. One of the things that, at least for us, it plays a tremendous role is within the first 3 months of every client cycle, you get maybe 6 months' time. By then, you get to know your client pretty well. One of the things I've learned over the years in my career is that banks don't like surprises. That's bottom line, okay? The first thing I'm going to hear is, first thing in the morning, tag 1, 2, 3, there is an issue. You either switch it off or you're done, right? I'm sure you've gone through this. So what we try to do when we onboard the client is try to understand what is the actual trading experience, what they've been, you know, what you've done before. Is it an HFT flow? Even sometimes people tell you it's HFT, it's not, right? It's nothing toxic about it. It's just that they like to categorize themselves as such. Let's see it to believe it. That's the way we play it. So for us to be aggressive, yet protecting our LPs, the key lies on a small piece of data that you know it as a mock-up, okay? And we have a third-party vendor that facilitates that service to me, and every API connection is being analyzed, sends out, this is market impact of that client, and then you start building on bespoke solutions so that you can cater to pretty much anyone without hurting your partner. This is extremely important. Just like I find myself with our team constantly trying to share our knowledge, the rules of engagement, as a matter of fact, as I like to call them, what are the rules of engagement? With every broker-dealer thinks that there's infinity in terms of liquidity. It isn't. It is OTC bank liquidity. It is limited. And you have to be very cautious how you're pricing clients, you know, what kind of NOP you got out there as a business. You know, we all have our NOPs with our PB or so forth. So we have to be very conscious. And I call it as a package. If you take all these parameters in place, you know how your client will be priced. You know more or less what sort of execution they should be expecting. But everything in this industry is about communication. Truthfully, no matter what, yes, we have AI. Yes, we have a lot of tools at our disposal. We've done a lot of integrations with some of the best third parties in this industry. For example, we're using Salesforce now. Wow, that's a tremendous piece of information, reporting tools that they facilitate, you know, Zendesk for client communication and so forth. And we see how AI helps us. And what is truly important, by the way, and something we haven't mentioned yet, is the beauty of AI is that once that data set learns about your business, it's like it's getting trained to give you better and better information. So information ultimately is decision-making power. I think just to summarize it in a nutshell, what I'm trying to say is if you need, or if we make use of tech with AI, and if you need extraordinary execution, meaning pricing, All these components we've been mentioning combined is what gives you that. It's not just one piece, one parameter will get you where you need to be. I think you all go through this daily.
I'll add something here, and then I'll go back to the data that you mentioned.
Briefly.
Very briefly, okay. I would say that, for example, what you said now is if you have a client who's with you more than a year, you're obviously a better liquidity provider with better conditions to him because you will improve it because you already know the client. When they come to you and you've never seen them before, obviously you cannot, we have also our protection for our concern, right? We need to be careful. So it's not like we want to be the bad wolf, we want to be the right partner and associate. So speaking for the brokers and our clients now is not we want the long-term relationship because we will be able to offer better conditions along the way. So, and I'm sure you guys are doing it as well. If you have a client who's consistently with you, you will give him better conditions. Now, back to the data, I agree 100% is the number one by far. It's how, and I will split it in two segments, let's say. One is how you utilize it, obviously, and by warehousing and utilizing and then analyzing and executing. That's very important. And then I would also mention the competition. The competition that you analyze the competition. You need to know where you stand. If you're out of the competition, then you're not in the game. And thankfully, as Valandis mentioned, we are in talk between us. So we know if someone comes, an abusive wave of broker will come, or some traders which they will have. We are in communication. We know that. We're colleagues at the end of the day, and we know we will discuss it. And that's very good for the business because we protect the retailers as well. The retailers.
Michal, something to add?
Just to sum up, of course, the first step is to analyze the competition, analyze the market during the regular trading conditions, of course, the spreads, the order books, the speed of the execution. The second thing is that how to be prepared for uncertain times and, let's say, lower volatility, basically, during some unexpected market releases. That's the challenging and interesting part. Of course, second part of it is the technology, yes? How to make sure that your data are the most accurate, especially that there are several types of instruments, let's say future-based instruments in terms of the indices or cash-based indices, how to make sure that they are reflecting the market in very milliseconds. So there's also technology part in that. And of course, the rest of the points that the gentleman has mentioned. So just to sum up.
I'm happy to see you all agreeing. Okay, we have 4 minutes. Oh,
Just want to add something that comes to mind now. When it comes to pricing, so today it's extremely important that you are fast pricing clients. Otherwise, you get ran over. We see this consistently. You got to be very careful how you're pricing and how quick you are. Meaning you need some of the best tech out there today. One of the reasons why we only use AWS now, it's not because I want to increase in operational cost, but it's because you have to be able to have some of the fastest pricing in the market. Otherwise, it can get pretty messy fairly quick.
Okay, thank you, John. We have 3.5 minutes, so I did have 2 more questions, but I'm going to leave it at that because I want to open the floor for questions in case there is anybody from the audience that wants to ask something to the panelists. Do we have any questions? One in the back? 1 second, they will give you a mic. Thank you.
Can you please share, maybe you have plans how you will manage with aggregation and prices with crypto to provide the best prices? Like, what is the benchmark in current time? Binance is not enough, KuCoin not enough, Kraken not enough, the files working, also there is regulations. So how do you plan to aggregate the data and provide to business and to customers the best prices? Thank you.
Interesting. Who wants to take it?
I can take that one. So when it comes down to, and I just want to make a clarification here, the way you get price on crypto, spot, and CFD is slightly different, despite the fact that, derives very basically the same as a CFD contract, traditional one. We're not market makers, but I have interaction with multiple market makers in the industry because we've been involved in that space for many years. Now, typically, and I'm speaking on a very general basis, there's a mid price among multiple venues. that market makers utilize in accordance to their book, and they construct that pricing model. What is the best price is what that LP thinks is the best price for you. There's no such thing as the best price. It's not an exchange product. It's not it's an OTC contract you're trading. So effectively, you just need to make sure that you have other sources available in the eventuality of a wrong fill, because you can always go and request a trade audit and argue on that topic. But mid-price will always be the accumulation of probably 10 different venues.
I mean, the whole point of the aggregation is because each one of the LPs will construct their price from the mid to skew to the side that their book is positioned at. So by aggregating all of these, you'll be able to achieve the best pricing from each of them because of the skews that they have. Having each of them individually wouldn't do the job, but like John said, cryptocurrencies are just like FX. It's an OTC market, and there's definitely a midpoint that you construct your price accordingly.
Anyone else wants to add something to it? Any other question from the audience? We have 1 minute left. No? In that case, I'm going to ask a big round of applause for all of our panelists. Thank you so much for sharing your wisdom with us.